Thanks so much for taking the time and pleasure speaking with you. I want to understand whether the third quarter was a bit of an aberration considering the kind of uncertainty that you've seen on the external front, and with several of these aspects now getting resolved, do you anticipate that the first quarter, because we've not seen a resolution till February, right? So one would assume that that impact continued in the fourth quarter as well.
Yeah, good morning, and thank you very much for having me here. And in fact, as I talk about the performance of the quarter and the outlook ahead, I think it's very important to understand that what was the impact of the macro environment on our performance for the quarter. So particularly in the quarter, we have seen that two major events which took place both globally and in India. So globally, we had this US tariff-related uncertainties, which meant that there was a huge headwinds in packaging films industry as a whole, and which impacted not only the US demand, but also because of export reorientation, it impacted the demand of the packaging films, which contributes to almost 2/3 of our revenues in other non-US markets, including the impact in EU and MENA and other regions too. And in domestic, as we are all aware, there was a GST transition, and which meant that a lot of restocking and this took place, impacting our overall revenues during the quarter. But having said that, in fact, largely for the 9-month period, our revenues held firm, and revenues in fact went up by almost 1%. It was flat to 9 months, which was actually the positive we take from the quarter. And at the same time, we saw very clear signals of this plateauing, and also during the quarter, we see this price pressure is stabilizing now. And also with the increased demand, we see a better quarter, much better quarter as quarter four, the current quarter. And this is expected to gain further momentum in the year ahead.
Okay, so that's going to be heartening for a lot of your investors to hear. The question, therefore, Mr. Kumar, is do you see a mitigation of the impact, as you've pointed out? Already you've seen that on the pricing front, but do you actually see volume growth in the fourth quarter, or will you have to wait for the first quarter of next year to see that volume growth?
Yeah, so in fact, as we speak now, in the quarter itself, we are seeing price recovery on the back of a volume growth also. So we see a combined effect of the volume growth as well as the pricing, which was at all-time low of POPET at about 90-92, now stabilizing at about 110. Likewise for BOPP, the prices now at 121, which were impacted by the import price pressure. I think that on account of the pricing recovery as well as the volume recovery, we can see this particular quarter, and moving forward, the quarters ahead should look good.
Got it. Mr. Kumar, the one is that it will look good because simply, just calling a spade, but in the 9 months, as you said, you taking heart from the fact that there has been stability, but there has been no growth. So therefore, any kind of growth is good versus having a flat performance in the 9 months, right? But I saw the chairman's message that the EU and the US trade deals, etc., all of that would help, so on and so forth. What is good? I mean, define good for us. You said quarter four will be good. You said FY27 will be good. What is good? Is it a low single-digit growth? Is it a high single-digit growth? Is it low teens growth? Is it mid-teens growth? Is it high teens growth? Or is it even better than that?
Yeah, so first of all, I think we have to see within the quarter itself that which were the segments which did relatively better than the packaging films, which had taken a bit of a hit on the production and sales volume. So within the overall numbers, you will note that we had the flexible packaging business, which witnessed a volume growth as well as overall revenue growth. We had the segment of the aseptic packaging, which is again a high margin business for us, which had a volume growth of 4.4%. And also for the 9 months, we had about 5.8 billion packs, largely on course to achieve close to about 8.5 billion packs. And that's a high margin segment that we definitely are confident will be the driver for our performance during this, to answer your question. And again, we see the packaging films, which of course accounts for a major volume. With this recovery of the volume and pricing, that should also chug along. And as a combined effect of packaging films recovery and the other two major segments, which is a value-added product, flexible packaging and aseptic packaging, doing better. Overall, we see the growth more or less in line with the guidance given earlier, which is in the range of 8 to 10%.
Okay, 8 to 10% growth in presumably in quarter 4 and presumably in FY27 or FY26 rates. Okay, does this growth and efficiencies have the leeway or have the ability to shore up your margins better than what they are right now for the 9 months, Mr. Kumar?
So within 9 months, actually, if you see on a sequential quarter basis, will give the right perspective. So as compared to quarter 2 and quarter 3, we have seen the margin expansion of 200 basis points, which has meant that largely for the 9 months, we are in the range of about 11.3 to 11.5%. We expect that trend, 11.25, we expect that to more or less on an average to achieve close to about 11.4 or 11.5% margin. But it was very heartening to note a 200 basis point expansion in the reported EBITDA margin for the quarter over the previous quarter, despite the impact on the volume and sales value.
Mr. Kumar, can you also give us a sense of the mix as you see it now that these major barriers or concerns on trade have been resolved? You have business that heads out to Europe, you have business that heads out to the US as well. And so therefore, how do you see the geographical mix panning out?
So in fact, for 9 months, we have close to about 56% of our revenues coming from overseas business. We have 44% which is coming from within India. But over a period of time, we have witnessed that this trend is shifting more towards higher contribution of the overseas revenue. So in fact, if you see, our expansion is also aligned to more growth overseas. And we see now with the normalization of the market, which were impacted by this US tariff-related uncertainties and the Europe volume and all now also picking up, we expect that this contribution will be more in favor of the overseas business. And likewise, the margins with the near commissioning of our Egypt aseptic packaging facility and also our WPP facility in Mexico, we expect those two post-commissioning, and once those enter into the operational phase, will further contribute to our overseas business.
Okay, Mr. Kumar, leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really, really appreciate your time.